9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Asian tech shares following U.S. stocks higher. It's after AMD's blockbuster forecast, really on the back of sustained demand for AI hardware.
Risk appetite also getting a boost as President Trump says the U.S. and Iran are making progress toward a deal to end the war. Meanwhile, Iran's foreign minister heads to Beijing for talks with his Chinese counterpart.
And that's setting up a runway for mainland markets that open up today, reopen today after the long weekend. Higher is the direction of travel following that extended break here. Travel shares in focus as initial data suggests that the May Day holiday shows a record 1.5 billion trips.
Yeah, 1.5 billion trips during the May Day holiday. You're talking about $1 trillion market valuation for the likes of Samsung right now. So there's plenty of good news out there here. And even geopolitically with the Iran situation, you have Operation Epic Fury, according to Marco Rubio, is basically concluded. You have Project Freedom that's basically on pause. I think that's a good backdrop for really risk today.
Yes, absolutely. And I think oil prices are telling you that we're down 2%. And of course, you have the Iranian foreign minister headed to China as well. So the stars are aligning certainly ahead of the big meeting, of course, which is roughly about this time next week between the two presidents. So markets are taking this one really, really well. We are looking at a substantial rally across risk assets. U.S. futures are also moving quite substantially in the early goings. And yet this reopen of mainland markets today really is set up quite well. But couldn't think of a perfect setup going into this reopen.
Yeah, it could be a good sort of catch-up story for China, given that it really has had some weak performance, especially when it comes to the tech gauge for the last several months or so. Is there now room for that sort of opening here? Certainly that's one case here. We have Eva Lee from UBS. She's talking about this DeepSeek, new model might actually be that new beneficiary here, that boost for the tech sector, for the chip space, for, of course, some of these internet platforms. But certainly, it still remains the memory side of things that is still near and dear to many investors here. And you take a look at what the Kospi is doing after coming back from that holiday. Yeah,
a bit crazy. 6% on an index level, 13%, as you can see, on Samsung. As we were pointing out, becoming, I think, the 12th or 13th company globally to be part of the $1 trillion club. And certainly the Iran pullback and retreat there on the war situation is really seeing a pullback across defense-related shares in South Korea, which obviously had been also bid up quite substantially on the back of all that. On top of all that, of course, we had this almost very Goldilocks moment for Hong Kong, right?
Yeah.
In terms of economic numbers, a couple of earnings to tell you about today. But yes, the GDP print was quite substantial, as flagged by the financial secretary on the weekend.
5.9% for the first quarter here, and really surpassing the growth we saw even in mainland China.
Yeah.
I think it's the first time since the pandemic that we've actually seen that sort of growth and really surpassing the mainland. And so it really goes to show, right, there's so much going on, whether it's the equity inflows that are coming into this market, this property sector that seems to be showing some nascent signs of recovery, and you add that to the tourist side of things, I think it's a good recipe for good news for Hong Kong.
Yeah, and I'm sure 1.5 billion, right? Part of that really came through as far as the trips go here in Hong Kong. Although, just a caveat there that the PMI numbers for April, which came out about 30 minutes back, were on the contraction side of things. Yeah. So maybe let's see how, what the net effect will be looking at markets going into the Wednesday session. But yes, let's get to the big story today.
Yeah, it's still AI. It's still also Iran, right? Let's get to the latest here when it comes to the Middle East. President Trump is pausing a U.S.-led effort to help stranded ships exit the Strait of Hormuz to see if an agreement with Iran to end the war can be finalized. Officials earlier said offensive operations in the war are over.
The operation is over. Epic Fury, as the president notified Congress, we're done with that stage of it. Okay, we're now on to this project of freedom. As far as a negotiation is concerned, I think the president's been clear that part of the negotiation process has to be not just the enrichment, but what happens to this material that's buried deep somewhere that they still have access to if they ever wanted to dig it out. That has to be addressed.
Let's bring in our team to fill out the details for us here. Michael Heath, of course, and also joining us here on set is Min Miller, our China correspondent. Michael, let me start with you. Do we smell the prospect of a more permanent ceasefire now?
Yeah, look, it's hard to say. I mean, in a sense, Project Freedom I mean, it basically has lasted a day, and it spurred quite a lot of violence, fresh violence, and a bit of a threat to the ceasefire that was in place. So to see it paused, sort of a day, perhaps 2 days later, isn't terribly surprising, because the cost of they got a couple of US flagged merchant ships through, but it came at the cost of ship attacks and missiles and the UAE coming under attack again. And now most of those attacks were fended off, but just the scale of what was required just to get a couple of ships through sort of suggests that perhaps it wasn't so worthwhile. The talks is more interesting because Pakistan obviously has been fairly central to the negotiating process that's gone on there. We sort of have heard some negative comments from Iran's president saying the US is sort of trying to negotiate with, put up its maximalist demands, and get Iran to capitulate, which it will never do. But by the same token, what's said publicly and what's said privately are quite different. The markets are certainly taking things as quite positive, but Iran actually referred to President Trump's Project Freedom as Project Deadlock, which in a way sort of perhaps explains things a bit more, because that choke point of the Strait of Hormuz really isn't opening up anytime soon. So while things have de-escalated a bit in terms of kinetic conflict, the actual movement of energy through sort of still doesn't seem to be happening.
So what do we need to look at for next? Do we know if talks have resumed? How is the Iranians responding to what the U.S. seems to be projecting, right, which is really downplaying this latest flare-up?
Yeah, I mean, it's really, really hard to judge, because obviously a lot of this is being done behind the scenes, and we've been told many, many times that great progress is being made. But at the end of the day, as Secretary of State Rubio mentioned there, the idea is that the US wants Iran to not be able to produce a nuclear weapon and to hand over its highly enriched uranium, which Iran has sort of, it's offered some compromises, but it's been pretty resistant to that. And by the same token, the US and the rest of the world wants the Strait of Hormuz opened, and Iran has sort of signalled that the world is never going back to that pre-war stage, that they will now have a degree of control over the transiting of ships through that strait. So there's some pretty strong areas that need to be bridged there, and pretty resistant to bridging, and they've proven that way over the weeks of this conflict and then during the ceasefire too. So, I mean, President Trump expressed optimism, so based on that you would say yes, but we have heard a lot of this before as well.
Okay, Michael, thank you there. Michael Heath there. Let's have a look at the China angle here, and of course the major component really to the story today is the foreign minister, Iranian's foreign minister Abbas Araghchi is in fact headed to Beijing today for his first visit to China since the war began. And Min Min, of course, is here with the details of what we know about this trip today.
Yeah, we know very little. According to the official statement, which just came out late last night from the Chinese side, it was a one-liner saying that the foreign minister of Iran is visiting. He'll be meeting Wang Yi, the Chinese foreign minister, and they'll be discussing international development. So that's all we know officially. But of course, you can read into the timing of this, right? It's quite strategic, coming just a few days before Trump is set to visit as well. So in a sense, this is a perfect opportunity for Iran to brief China on the latest developments, what they see as a potential endgame, what do they want to get out of a potential political solution to the end of the war. And perhaps China could once again play a role in being that interlocutor between President Trump and Iran, especially given how the last ceasefire that was brokered by Pakistan, we have those Iranian officials that told us and that credited Chinese officials for having played a part in securing that deal. And President Trump himself also credited or acknowledged China's role in this, even though China has themselves been downplaying their part in that. So certainly interesting to watch that. It also comes as the foreign minister Araghchi has been making a number of trips to the region. He visited Russia, he visited Oman and Pakistan as well, really in a bid to, I guess, shore up international support for this ongoing negotiation.
And the timing, as you say, of this trip is quite interesting. We're just a week away from President Trump, that trip to China to meet with President Xi. And what we're hearing so far is President Trump really downplaying the recent, I guess, strains that you're seeing with China because of this war?
Yeah, I mean, as usual, President Trump always has pretty warm words to say about President Xi, and this time he is saying that China has been pretty respectful to the U.S. With regard to the Iran war, that they has been, quote, very good about this. And so, again, and this comes as Marco Rubio also held a press conference and said that Taiwan is not going to be a major issue. Have a listen.
Both countries understand that it is neither one of our interests to see anything destabilize happen in that part of the world. We don't need any destabilizing events to occur with regards to Taiwan or anywhere in the Indo-Pacific.
So, of course, this is coming as U.S. military assets in the region has been stretched thin with resources being moved to the Middle East. And so it seems like the priority for Washington is to stabilize things in Asia and in the Middle East with that pause to project freedom. And it's hard to say how much China has a role to play in this, because there are some economists that says that China could use the Trump-Xi summit itself as leverage to push Washington to de-escalate things in the Middle East, because we all know that, it doesn't look good for President Xi to be meeting Trump when the war is happening in the background. So perhaps that plays a part as well. I mean, it's hard to tell what really shaped the decisions on the ground there, but certainly Iran is going to be a major thing on the agenda. And of course, Taiwan also another major issue, especially when Taiwan legislators are debating the bill for the defense budget as well.
Yeah, that's something we'll talk about, of course, today as well. Min, thank you so much for all of that, our China correspondent there. As markets are parsing the news right now, it's really positive. That's a key takeaway across markets, and I think Samsung is a very good example of that. Obviously, on the back of the AI build-out, he had some earnings coming through out of the U.S., and the $1 trillion dollar mark on the valuation has just been taken out as far as Samsung is concerned. The other thing I want to point out is a 14% pop in Samsung is now, we're on track for the best day in about 18 years. It's interesting that Stan chart, this one coming out about, I think, an hour or two back from Steve Bryce, global CIO, they're now calling time on semiconductors. We're now closing our overweight on Asia ex-Japan and semiconductors, and of course they're also closing their underweight to a laggard Europe, and they do expect this broadening out of the rally. How do we split that information and split the difference? Mark Cranfield is with us out of our MLive team in Singapore. Mark, obviously there's a rally that continues to be chased. Is it too late to chase the rally at this point is the other part of that question?
You can certainly understand where Steve Bryce is coming from. As you say, if you're not involved already, do you want to step into a rally which has been going gangbusters for a very long time already, and valuations are really quite extraordinary. If you look at the forward PE for the Kospi index, it's below 10, I believe, now on a one-year forward PE basis, which makes the assumption that the extraordinary profits being generated at the moment will continue for a very, very long time. Well, we know from history that that's not always the case, and so there's a lot of things are priced into the market already. The other point about it is that when at the peak of the war and during most of the US-Iran war, the whole AI theme was seen as somehow being protected from the reality of the rest of the world. So you can continue to buy anything related to semiconductors. The demand for the hardware is so strong, it doesn't really matter whether there's oil supplies or higher bond yields. All of those things you can put to one side, because the only story in town is the AI narrative. Now, if we are getting close to a genuine peace settlement, and that is still some distance away, the Iranians haven't said very much about it, as you were discussing earlier, so they obviously need to come on board. But let's say we are now getting much closer to the reopening of Hormuz and back to a new chapter of relative peace in the Middle East, then there are many, many catch-up plays out there in the global equity market. When you've only had one theme to chase and you've ignored almost everything else apart from defense stocks, then there's time for a lot of recalibration. And under those circumstances, people may always say, why, I've put far too much into the AI story. Those are very overpriced. I need to shift money somewhere else where there's a good chance of a catch-up now that we have a different environment.
Yeah, where could be that catch-up? I mean, I'm looking at China. Of course, we've been shut for a few days as well, but this clearly has not been a market that has been riding the coattails of this whole AI wave in some ways, apart from the AI hardware side in some of the onshore markets. But HS Tech continues to be a laggard for months now. Mark, could that be where the catch-up trade is?
Exactly. I mean, sometimes it's simply a question of who was the biggest laggard and who was the best performers. And if you look at Asia itself, Korea, Taiwan, certain parts of the Japanese market have been doing fantastically. Hong Kong, Chinese tech have been lagging way behind. Some of the Southeast Asian markets also struggling a bit because their currencies have been under pressure. So on a very simplistic basis, the money in North Asia, which has been doing very well, may just shift to the south and some to Chinese tech as well. So that rebalancing in itself could be pretty big and could account for some very major shifts. If you look at the Chinese tech really has been underperforming since the end of last year. So there's plenty of potential room for them to improve if you think the AI story is pretty much over.
Mark, thank you. Mark Cranfield there, MLI strategist, joining us out of Singapore here this morning. Still ahead, as we talked about, mainland markets are set to reopen in just a few minutes after that May Day holiday. We talked about the consumption numbers. What is the strategy moving forward here, as we've been talking to our guests about China largely being left behind in this whole North Asia rally? We got Eva Lee, UBS Global Wealth Management, their head of Greater China Equities, joining us to tell us more about what catalysts there are and the AI trade too there in China. We're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
Welcome back. Yep, we're approaching the reopen today of mainland markets. Long holiday there, 0.4 to 1% today. So I think we should be poised to open slightly above half of 1%. Looking at mainland markets today, reference rate of the day coming up as well, bottom of your screens. Yeah, so this reopen is going to be interesting.
Yeah, let's bring in Eva Lee, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. We've talked about how China has been sort of overlooked this year amidst this AI wave in North Asia. I mean, how do you expect this reopen to shape up? Do you think there's a catch-up story here?
A little bit, but of course, if you look at yesterday, U.S. market that has helped. So I think overall, I would say calmed. Because if you look back at China H, the last few days is like up and down, so it's more like stable. So I think China A will just continue in that, and of course the focus will continue onto chips, domestic chips, domestic AI equipment. These are the play that will continue to do well.
How much questions do you get over that? That it's Chinext and not the Hang Seng Tech Index?
Loads of questions. How to get exposure? Because we're talking about domestic Asia. So international investors might be a bit difficult to get exposure to that side. Okay. And some of those are mid-caps.
Is it because of market mechanics, or is that because there's just a mindset that those are too small, those are too domestic?
The valuation, it's like, some of them are 50 times, 100 and 150 times. So how to get exposure in safely? I think that's the usual questions I have, yeah.
The DeepSeek moment of last year, I mean, that certainly was explosive. We got the DeepSeek moment of 2026 with this new model. It doesn't seem like we're getting the same amount of fanfare, maybe because it was very widely telegraphed. But do you see this as being the next catalyst for the tech ecosystem in China?
I think it continued to be. I think if you look at the performance itself, now they are like 10% below the international models. But cost-wise, it's also 90% or even 80% cheaper compared to the international model. So I think at the moment, maybe people are like, okay, we move on, let's wait for another catalyst. But I think eventually the catch-up story and the cost competitiveness will, sort of outshine, the international players. It's just like EVs. I think I remember the EVs has been, they're doing very well, they're cheap, and now you see the number of EVs that's sold in international market is actually more than those manufactured in the foreign market. So I think that will come, but it's just timing.
Well, speaking of timing, I know you still favor the big internet platforms.
Yes.
Is that just hope, or I mean, we have earnings next week. That's earnings next week, right?
Yes.
So, well, how do you justify a call when they really haven't participated in the rally?
I have to say, they're joining the U.S. hyperscaler, which they have not done too well. I mean, if you look at the international market, a lot of focus is on chips, memory chips. So the China hyperscaler also doing something similar. And of course, the consumption story doesn't help. We start to see consumption sentiment coming back.
It's improving.
Yeah, right. The property market bottoming out. So all of these would help, but may not be after this result season. Maybe we need to wait for one more result season for really sort of sky search. Thing. Yeah.
Okay. We'll have more, of course, with Eva Lee. She'll be rejoining us in a couple of minutes here to parse out further ideas here as it pertains to the markets. Okay. The opening bell is about 7 minutes and 30 seconds away, give or take here. Hang Seng Index in the early goings, 0.5% to the upside. We have a 50-year bond auction, by the way, today in the mainland. Lots more ahead. This is Bloomberg. Right, welcome back. So 0.5% to the upside on the Hang Seng Index. I mean, nothing really compared to what we're seeing in Korea, but that's a different scale and a different story. But yes, we are looking at gains across these boards right now, and a lot of catch-up trades to tell you about, plus, of course, a lot of earnings.
This could be a catch-down one when it comes to Wu Liang Ye.
Oh, yeah.
So we've been seeing analysts really slashing their outlooks on the company now after they had to restate their earnings for the first 9 months of 2025. So the financials was significantly lowered for revenue as well as for profit here. So you have the likes of Goldman. I think that's a downgrade their stock to a sell from a buy. You have Bernstein kind of the rate to underperform and Citi opening that 30-day negative view on earnings risk. And they're saying this does bring up concerns about reporting consistency as well for the company. And might it actually lead to the rest of the liquor makers to fall today? That could be a big question. We'll see how things fare. When it comes to stocks to watch, HSBC is certainly the big one here. Yesterday, we saw that drop of 5% on the back of their earnings. There was, of course, that collapse, the MFS implosion here, the collapse of the UK mortgage lender. That was that unexpected charge. And then you had that 300 million increase in allowances as tied to, of course, them, keeping a little bit of money safe here in this global economic outlook following the onset of the provisions of what's going on in the Middle East. So the stock recovering just a bit, but certainly we'll see if that sticks here today. New World, we're getting some news there when it comes to just overall. They're weighing a sale of a stake in its $2 billion hotel portfolio.
The Hyatt.
Yeah, no movement just yet here for the stock. But here's what we're seeing when it comes to, of course, what we're looking at. I mean, the reopen of China certainly is a big one here today.
CSI 300 up 1% in the early goings. Chinax is up even further there. So we'll have a look at the reopen coming up next. This is the China Show. Good morning. So some very encouraging news on the war front today. So that's really boosting risk assets. It's also 13 seems to be a lucky number today. So Samsung has become the 13th company globally to enter the $1 trillion club. Hong Kong growth at 5.9%, I believe, makes Hong Kong the 13th fastest growing economy.
Wow.
It's growing like an EM. 12 or 13.
Lucky number 13. You're just like Taylor Swift. It's interesting, right? There seems to be some good news here. You add the whole kind of semiconductor sort of trade that continues to fire on all cylinders, particularly when it comes to Samsung here joining that $1 trillion club and really following the likes of TSMC. And there's enough there for your reopen in China today. So after being shut for several days, here you go. You've seen that catch-up story play out here on onshore markets. CSI 300 is up 1%, but it is still the chip space, the hardware space, and the AI trade there, then Chinex. There you go. We are firing at 2% to the upside there when it comes to Shenzhen. And we're still watching when it comes to Shanghai crude. There you go. So we are following Brent markets and WTI markets lower here this morning on the back of what we heard from, them trying to put a hold on this whole Project Freedom, and then Operation Epic Fury, according to Marco Rubio, is over. So that, in terms of the geopolitics and the temperature, has been lowered in some ways. But we've seen false dawns like this before. But there you go. Look at Capricorn Tech. So chips definitely getting a massive their bid there. We're up 5% for that company. Kuwait Chow Maltai, interesting. Could be because of the Wu Liangye sort of story that you're seeing a little bit of a fallout there as well. But CATL, there you go, continues to be an up arrow story there. Consumption, though, is getting hit here today. That's despite some pretty decent numbers that we got when it comes to consumption and some of the travel patterns that we saw during the May Day holiday. But Medea Group, there you go, is down 2%. So it's tech over consumption here today in terms of that trade. Here's how Hong Kong is faring here. We're pretty flat when it comes to the benchmark. We're just around that 26,000 level. HS Tech is also not doing a whole lot here. We're treading water, but it's kind of a push and pull between what you're seeing. But Tencent seems to be leading the charge lower. We're down about 1.4%. We're still watching HSBC recovering a little bit, that stock, after the results did disappoint yesterday when it came to the unexpected charge, when it came to MFS. And then you have, of course, the increase in allowances when it comes to what they're dealing with in the Middle East. And so certainly that story continues here today, but we're stabilizing a bit when it comes to the stock. Property continues to do very well. Look at Hang Seng Property. We're up 1%, perhaps on the back of those first quarter GDP numbers. The fastest pace of growth we've seen in Hong Kong in 5 years, Dave. Let's take a look at the chips trade domestically in China here, of course, as mainland markets reopen. And there you go. These are some of the 8 shares that we're seeing. But yes, they're following the likes of TSMC, following the likes of Samsung, and of course on the back of those AMD results in the U.S. as well. There you go, 4 to 5% gains for Hua Hong as well as SMIC this morning.
Okay, a brief look at, we talked about Maotai there. I think Wu Liangyang is coming up as well. And I think the other stock too among the three is, there we go, bottom of the screen. So we're down 6 on Wu Liangyang. We're down about 4 on the third booze maker there, Luzhou Laojiao. A cheers to that downgrade. Thank you so much to the brokerage space for that. Still with us here on set for some final thoughts on these markets. Eva Lee, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Officer. That's a mouthful every time I say it. It's hard to get excited over insurance, but you've made it slightly excited over insurance. Why do we need to be excited over insurance?
The first quarter results tells you so. The NBV of one of the biggest companies up 70%. So it's a very good evidence telling you that people are moving a small part of the maturing deposit into investment. So the first destinations tend to be insurance because it's safer. And we're talking about, some banks are talking about 30% of these maturing deposit putting into work. We are putting in 10% as our expectation. But 10% already is a big number that could revive or help to support the momentum, particularly on China H and select stocks in China H.
So beyond just maybe AI, you're looking into insurance. What other sort of sectors do you think could still be pretty favorable this year?
Power equipment.
Okay.
I think, it's an extension of what U.S. has been experiencing as well. And for China's story, it's apart from domestic demand. More importantly, they are breaking into the international market. There was one company announced yesterday they received orders from Canada. So I think these type of story would help to support earnings and margins, because this is sort of like EVs. They get better margins from international market versus domestic market.
What about I know you cover mainly equities, but there's a view out there that inflation is starting to come back and rates are moving up. Do you have any opportunities in the fixed income space? Are people too hawkish over mainland China right now when you look at the policy?
A little bit too hawkish.
Okay.
We are still expecting a rate cut of 2 rate cuts, but more into the fourth quarter this year. I understand the situation now is tough to expect that, but I think it's more like once you get a settlement or certainty on what's happening in the Middle East side, we probably will move on and look at the economy in U.S. and that is a scenario we think we have an environment to have rate cuts, and as a result, then we probably would have a good opportunity or potential for the yield to do better, and as a result, the bonds will do better.
Okay.
Some are saying this Trump-Xi talk next week could be the next catalyst to watch. What sort of breakthroughs, if any, are you expecting this time around?
I'm actually not expecting a breakthrough, but in fact, more of a no escalation on anything, more of extensions. And I think they are doing a review on the trade 301. I think I saw the news this morning.
We're talking about that again.
Yeah,
okay.
so, as long as we have a further extension, stabilizations, staying status quo, I think that's the best thing we can get from, the meeting.
Can I ask you about Hong Kong, specifically? Hong Kong-oriented, exposed investment strategies. I mean, the economy is doing well.
Yeah.
Is there anything I should be looking at there?
In fact, if you look at the breakdown of Hong Kong GDP doing well, a lot of it is relating to our export on AI-related equipment. So there are stocks that are doing, this, which I cannot mention.
Yeah.
But I think that exposure and also some of the industrial that are exposed to exports side, they will also do well. And plus, if we expect U.S. economy underlying is actually very strong, any companies exposed to that will also be better. On top of that, of course, the banks, Hong Kong banks in general, it's still giving you good yields, and utilities. And also there was one area that actually have been underperforming, the Macau gaming.
Yeah.
And in fact, if we have more of the domestic tourism doing better, the Macau gaming also should be better too.
Okay. Eva, thank you. Eva Lee there, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. As we talk about, right, Hong Kong is coming back in a big way, Dave. You're watching things very closely, these numbers.
Yeah, in fact, I'm glad Eva brought that up, right? So when you look at the, obviously, blowout numbers, 6% growth is something you don't normally see, not just for Hong Kong, right, for developed economies. It's almost growing like an EM, and I'll talk more about that in a moment. Most of the major pillars of the economy are firing quite substantially. Household spending's up 5%. You have government spending, you have investment, 20% to the upside. What is not here, I can also tell you about the export component, which Eva just mentioned there as well. 26% growth in export of goods. So this AI story is showing up in a big way when you look at some of the shipments out of Hong Kong. So all of that is really contributing to what that you got right there. So this one in context. So we track about 135 economies across the world. And we talked about that massive blowout number coming out of Taiwan just earlier this week, right? So Hong Kong, that 5.9% growth clip is actually enough to put Hong Kong in the top tier, 90 percentile, right? So it's growing like not just an EM, it's growing like a booming emerging market economy. So, and this is really playing out, not just in the economic numbers, but also in markets, Yvonne.
And it just goes to show, right, that these economies, yes, we're still dealing with this energy shock, but there is a bit of resilience here in how they are weathering this Iran situation, right? And certainly we're not just seeing that in the data. Oh, that was a quick zoom.
Yeah,
but look at the stock market as
there.
well. I know the stock market doesn't show the economy, but certainly you are seeing when it comes to MSCI Hong Kong versus MSCI China, there is a clear outperformer here. Of course, the blue being MSCI Hong Kong has very much in some ways surpassed what we saw when it comes to mainland markets. Well, you added the economic numbers are favorable. You talk about what really has outperformed. When we talked about it hasn't been the tech space. It hasn't been these internet platform companies, but it really is some of the Hong Kong domestic listed or domestic sort of focus stocks like property, for example, where you start to see signs of not just the residential sector, but even beyond that. Morgan Stanley, I believe, this week was just saying you're seeing signs of this, even commercial side of things looking a little bit better. And then you have things like HSBC and some of these banks as well that are also doing quite well. Insurance, as Eva's mentioned, could be another bright spot potentially here. So it's not just the economy, but even the stocks itself here in Hong Kong that is weathering all these external factors that are coming from the Iran war. We'll have much more coming up on the Hong Kong story next. Keep it here. This is Bloomberg.
Welcome back. We're about 11 minutes into the reopen of mainland markets after an extended weekend. And as you can see, so the CSI 300 is up 1%, not bad. But it's really in the more tech-centric benchmarks that you're seeing the gains here. So 2.5% on Chinex, and the Star 50. We're up now 7% on that. So really a lot of momentum continues. Like what long weekend? Like, that's a continuation of what we've seen in recent weeks.
Sounds like it was a good weekend.
It really
sounds like a
was.
good break to come back and be long these markets. Also, we're starting to get some good data from when it comes to the May Day holiday that just wrapped up in China. The Ministry of Transport is estimating over 1.5 billion passenger trips were logged during that 5-day holiday. Well, interregional passenger trips probably rose around 4% from the same period last year. Meanwhile, in the box office, that raked in about 755 million renminbi for the holiday, which is still well below the 1.5 billion we saw back in 2024. So, to see how things are looking, let's bring in our Bloomberg Intelligence senior consumer and tech analyst, Catherine Lim. Catherine, I'm sure you've been parsing through some of these numbers. What stood out to you? What looked good? What looked not so good?
Well, you know what? I think it's kind of like mixed. I don't think it's new that, there's going to be a lot more of the domestic tourism. We've seen some of the revenues, the receipts related to this going up, in a positive territory. But, it is a 5-day holiday itself. Was there anything that really, took me by surprise, and especially on the positive side? I have to admit, not at this point in time. A couple of things to actually note that, I wasn't expecting anything, death-defying, I would say, from retail sales, particularly since, we will be stepping into the 618 Shopping Festival. And if you recall, that's the mid-year shopping festival in China that pretty much starts, I would say, today, depending on which platform that you're talking about. But Alibaba, for instance, will be starting theirs on May 20th. So, more buying to come, I guess, in the next couple of weeks, but not exactly now.
Catherine, can I also ask you about Lululemon? So obviously the shares have not been doing too well of late, and I think you have this changing of the guard in terms of the leadership there. I know you guys have been looking at that specific story, especially their exposure to China, where really competition is quite fierce. So what is that growth story for Lululemon in China?
Right. Definitely I would say the sportswear sector still remains one of the more resilient sector if you look from a more macro policy perspective and some of the structural changes that's going on, within China. We still continue to like the sportswear sector, except, as David, you've actually highlighted, it's getting more competitive itself. And for Lululemon to, continue to want to price its products at the higher end of things, it really has to have a fairly foolproof formula, which took a little bit of a shaking recently from controversials over, the PFAS, I guess, probe that was going on in US that, took Chinese netizens' attention on social media, and something that we are trying to actually ascertain as we go into the summer as well. To see whether the controversy itself has actually affected the companies and the label's ability to actually hold back on discounts, which it has done an amazing job year to date in China. And then going forward, we'll have to actually see whether sales continues to be very robust in the north of 20.
Catherine, thank you. Catherine Lim in Singapore for us, our Bloomberg Intelligence senior consumer and tech analyst there. Just in some numbers coming through, economic numbers. This is the soft numbers here. Survey, Rating Dog China April services coming in at 52.6. So that's clearly an improvement from the 52.1 in the prior month. The composites also coming in at 53.1. Also an improvement from the previous. So more of these green shoots are starting to show up.
Yeah, the stars are starting to align a bit more, not just when it comes to the data that you're seeing when it comes to China, but as we were talking about in Hong Kong, right? The economy defying a global energy crisis to post its fastest growth in nearly 5 years. Let's bring in Nectar Gan, China economy and government reporter, joining us on what's driving the growth here.
Right, Yvonne. I just want to add a little bit of context on the number here. This comes as a big surprise because it actually exceeded all forecasts by economists surveyed by Bloomberg. The median was at 3.5%. And interestingly, as you mentioned, mainland China, this is actually the first time in 20 years that Hong Kong's quarterly GDP surpassed China's outside of the pandemic, which we saw a lot of disruption. So this is a pretty big deal. And what's been driving, there are mainly two factors. We're seeing a huge boost in investment. That's about 18% increase year on year compared with same period last year. So a lot of it is also the restocking of the inventories, right? Like companies, because of the AI boom, right, has driven a lot of demand for AI related electronics and equipment, and because of the Iran war, right, we see a lot of sort of stockpiling activities by companies, and at the same time, there's also this 5% increase in private consumption within Hong Kong. So we're seeing, this so-called wealth effect because the property market has finally kind of turned a corner after, years of prolonged downturn. The stock market is doing well. So like consumers' confidence is increasing, right? So we're seeing people more willing to spend. So the Hong Kong government also sort of emphasized this strength in exports that we've seen in the first quarter. But what it didn't mention is also we've actually seen imports outpace exports. So if for the first quarter, imports increased by nearly 30%. And we saw last month Hong Kong's trade deficit reaching its highest on record. That's all the way dating back like 70-something years. So that actually subtracted about 9 percentage points from the headline GDP growth, according to Goldman Sachs calculations.
So everything went well. Almost everything went well. Can the momentum continue? What's the outlook from here on?
Right. The government is pretty positive. It says that, this AI boom is going to continue, and Hong Kong is seeing a lot more arrivals of tourists. We saw about like 16% increase year on year in the first quarter, and the cross-border financial activity is still, very bullish. But at the same time, it also comes with risks, right? Hong Kong obviously imports all of its energy, so it is very vulnerable to the historic oil shock triggered by the Iran war, and the stockpiling in inventory could be, temporary. And if the conflict drags on, it could have impact on global interest rate, and that would raise questions about Hong Kong's own sort of property recovery. So it is a rosy outlook, but it comes with also downside risks.
Yeah, and I think the PMI, which came out about an hour back, was already quite on the softer side, and that was for April, of course. Nectar, thank you so much. Nectar Ghan there, our China economy and government reporter there. If you can get more on the Hong Kong story, in fact, we have the newsletter. I believe it's tomorrow.
Tomorrow comes out.
I might lose track of time. Comes out every Thursday. Scan the QR codes on your screens, of course, to subscribe to that. It's free. So in case cost is rather elastic for you at the moment, don't worry about that component. Check it out. Of course, look at markets before we take a short break. Lots more ahead. This is Bloomberg.
In some world news this morning, sources tell Bloomberg that officials in Abu Dhabi have held talks on creating a new defense-focused investment vehicle. We're told it could aim to centralize efforts to build stakes in global defense manufacturers and expand domestic production. The UAE is looking to strengthen its military capabilities after coming under attack in the Iran war. The Securities and Exchange Commission has released a proposal to allow U.S. companies to report earnings semi-annually instead of quarterly. The move could potentially reduce how much information publicly traded firms must share with investors. SEC Chairman, meanwhile, Paul Atkins, has promised to fast-track the plan, which President Trump first floated last year.
Right, for a look at markets and where we are, we're back to records here after that wobble that we had on on Tuesday. And of course, you have a couple of markets coming back online today, like South Korea, and so somewhat of catch up. But even if you consider and discount the catch up, this is still quite a fantastic day in the equity markets. They're 6% now on the Kospi index. Nikkei is close, so futures are still trading, though. I believe these are the ones in Osaka, up about 3%. Or are these Singapore? Anyway. Still trading is the point we want to make. The reopen as well here across mainland China, and of course the iterations there on AI and hardware and small caps and tech and the intersection between all those things. And as you can see, substantial gains on the Star 50 today. In fact, even better than what we're seeing over in South Korea. This broad tech rally is really showing up in this, and continuing to show up in this pocket of the equity market.
Yeah, I think what you're seeing when it comes to semiconductor space is certainly that's helping this whole AI hardware trade once again at a time when we are seeing AMD and the earnings side of things is actually delivering too. So certainly that's helping this whole story. And then you add what's going on in the Iran situation, and I think that the fact that the White House is putting a lot of effort and time and downplaying this recent flare-up when it comes to fire that exchange between the U.S. and Iran, and saying, look, the ceasefire is still holds right now, and they're really hoping for peace talks, right? Does that lead to a potential reopening of the Strait of Hormuz? Obviously, those are still lingering questions, but at least the tone has been positive from the U.S. side of things.
Absolutely, and I think the big development here, in case you missed that one-liner statement coming out of, I believe, the Chinese side yesterday was the Iranian foreign minister.
Yes.
Is actually now he's headed, if not in Beijing already, but he is, of course, scheduled to be in Beijing today as something to watch, of course, and we'll see what those dialogues bear fruits and what really comes off those conversations. And, of course, this comes ahead of this time next week, the big meeting between the two presidents, President Xi and President Trump. Crude is coming off a little bit 2%, indicative really of this risk rally we're seeing across markets this Wednesday. Lots more ahead. This is Bloomberg.
Welcome back to the China Show. A look at the CSI 300 after coming back from that long holiday. And there you go. It looks like people are in a good mood. Right now we're seeing upside about 1.5% for your onshore market there. And yeah, really following the trend and really catching up to what we're seeing for the rest of the region here today. Yes, the semis continue to be on fire. You see when it comes to the Kospi. But really, it's not just the CSI 300. We're looking at the other gauges as well within onshore markets that are actually doing better than Shanghai right now.
Could not have a more perfect name than the Star 50. There we go. We're up 8.6. Volumes are about almost 100% heavier than what we're used to seeing about 30 minutes into the session here. Chinese index is also at session highs 3%. I think some of the decliners, which we'll get to later on, some of the liquor makers, of course, are heavily weighted. The reason I bring that up is because despite the weakness there, we're still seeing gains off the short. Across the region, Japan is still shut today. Kospi is reopening up. Taiwan, of course, we talked about that, and we're back to records on the MSCI Asia Pacific. Kospi is up 6% now, and I think Samsung last we checked is up something like 12%. Something crazy like that. Best day so far, going back to 2008. Chip stocks, as we were just talking about there, 12%. Thank you so much. SK Hynix, MediaTek, which has been on an absolute tear. And for once, TSMC is not joining this rally we're seeing today, although it's still up about 0.5%.
MediaTek has been almost limit up for the last third day now. Record moves really there for that company. So certainly you're still seeing the Taiwan supply chain do quite well. Here, the double-digit gains when it comes to SK Hynix as well as Samsung. That certainly is still stealing the spotlight here today. But yeah, it really puts Samsung in a very elite club, right? They're finally joining in on this $1 trillion market cap, really joining the likes of TSMC, the second largest when it comes to Asia. You said 13th globally, right? Yeah, so there you go. Making the ranks there when it comes to Samsung. And yes, I think I got to thank AMD for that as well, just given the results that we said that they got, that blockbuster forecast that came through from AMD. Yeah,
here we go. So we have NVIDIA. What's interesting is that I think Alphabet is closing in on NVIDIA. That's another thing we need to keep an eye on as well, right? To become the biggest company. Then, of course, Apple had that substantial gain this week. And, of course, you have the rest of your Mag 7 there. Tesla's in, Meta, and, of course, Aramco. Broadcom, Walmart is $1 trillion, and of course Berkshire, which reported on the weekend, and Samsung and TSMC, as you can see, are now part of this elite club of 13, lucky number 13 here.
Yeah, let's bring in our Bloomberg MLS strategist, David Savage, on what he's watching out for here today. I mean, how long can this whole semi-trade go, really?
Yeah, I mean, everything that could have gone right has basically gone right, particularly for Asia's hardware giants, right? And coming into today, we knew it was going to be a good day given the lead-in from the U.S. semiconductor stocks. SOX index was up 4%. And then, of course, we got the news from Trump, and that really, hit oil futures, and probably has helped Chinese stocks, mainland stocks, quite a bit. But that's certainly given it an upward lift, really across Asian equities.
Is the dollar done now? How do we look at the dollar now? What's the macro implication?
I mean, what's interesting about the dollar is it really just is another added lift if we look at risk sentiment in the region, right? So the problem in March was we were seeing stronger dollar, on the back of higher oil, which was really compounding the inflation pressure, right? Which was really making a real difficult policy dilemma here in North Asia as well. With the dollar coming off, that takes a little bit of the pressure off. And we're particularly seeing that in North Asia, right? So the South Korean won is doing very well today. And that helps a lot when it comes to thinking about financial conditions. But I think it's also reflective of the environment. We're seeing really a lot of foreign buying in the region, particularly South Korean and Taiwanese stocks. And I think the gains today will probably boost that even further.
Any risk to be paying attention to when risk is not obvious today?
Yeah, I mean, today I think my colleague Mark Cranfield already noted, concentration at risk is going to be continue to be talked about, but isn't something to probably look to today.
Okay.
Again, I think the risk, of course, is what does the Iranian side say about this? I think a real added boost, particularly if we look at the mainland share indexes, have been sort of this peace dividend. Are we getting closer to the Strait of Hormuz reopening? We haven't heard the same type of rhetoric from the Iranian side yet. So if that kind of hits at that optimism and we see oil futures start to move higher again, that could hit sentiment quite a bit. It probably doesn't take tech, but in terms of broadening this rally beyond tech, that would certainly impact things.
Fantastic. David, thank you so much. David Savage there out of our MLive team. Korea defense stocks really on the back of what David was talking about, this peace dividend on the down today, really amidst this hope that we are really nearing the end of this war tunnel there. Declines there across Seoul today.
It was an interesting take from Steve Bryce, right, from Stanchart that you saw. Was it on LinkedIn?
It was on LinkedIn, yes.
Where he basically said, look, it's time to close that overweight when it comes to Asia, ex-Japan, and the semis here, because when you have concentration risk, as David mentioned, it's so narrow. Normally, it doesn't lead to market correction per se, but really it's more about broadening this rally. So maybe they're looking at elsewhere now. Maybe there are other places to that rotate to, go to some of the laggards. Maybe it's China, which is what we're seeing a little bit of that here today. But certainly, maybe it's time to call time, basically, on this trade.
Yeah, don't be too narrowly focused on just a handful of things. Okay, let's get into the Iran story here. Right? So President Trump is actually pausing this U.S.-led effort here to help stranded ships exit the Strait of Hormuz to see if an agreement then with Iran to end the war can be finalized. Now, White House officials earlier said that offensive operations in the war were over.
The operation is over. Epic Fury, as the president notified Congress, we're done with that stage of it. Okay, we're now on to this project of freedom. As far as a negotiation is concerned, I think the president's been clear that part of the negotiation process has to be not just the enrichment, but what happens to this material that's buried deep somewhere that they still have access to if they ever wanted to dig it out. That has to be addressed.
Meanwhile, Iran's foreign minister Abbas Araghchi is traveling to Beijing today for his first visit to China since the war began. And that's just over a week ahead of President Trump's scheduled meeting with his Chinese counterpart, Xi Jinping. Let's bring in our China correspondent, Min Lo. I heard that this kind of came through very last minute, or what we're hearing about it. What do we know so far about this trip?
Yeah, we only found out about it last night when the statement came through from the Chinese side, from the Iranian side on their Telegram channel as well. But it was a one-liner statement saying that Araghchi is traveling to China to meet with the Chinese Foreign Minister Wang Yi to discuss international development. And this comes, soon after, or I would say soon after that announcement. the U.S. then announced they're putting a pause on Project Freedom and that putting an end to this offensive operation in Iran. Certainly a lot of relief coming through in markets, but also it seems to be a flurry of diplomatic activity that is happening right just ahead of Trump's visit to China. Arakchi traveling to China now as well. It is in some ways a perfect opportunity here to brief China of what they would want out of a political solution to the end of this war. And China so far has not officially come out to say that they want to play a stronger role in mediating the conflict, but certainly in the last ceasefire that was brokered by Pakistan, we have Iranian officials crediting the Chinese for playing a role in securing that deal, and President Trump also acknowledging the Chinese role in that ceasefire deal as well. So potentially, maybe there is a role for President Xi and China to play here again.
We do have some breaking news right now. There we go. That the foreign minister of China's Wang Yi is meeting the foreign minister there, as Min was pointing out, in Beijing. Now, how does this set us up ahead of next week, as you're pointing out, the big meeting this time next week, and the U.S. president is downplaying these strains that were perhaps being overplayed.
Yeah, so President Trump says that China has been very respectful, that they have not challenged the U.S. when it comes to Iran. This comes after the U.S. had placed sanctions on these Chinese oil refineries, and there are concerns, right, whether there would be secondary sanctions on Chinese banks, for example. But our economist thinks that that's not a very real possibility, just given the concerns around the implications on global financial stability. But of course, there are many ways this could go, and it seems like the signs from President Trump is that they want to keep things on the rails here, particularly with Taiwan on the agenda as well. Marco Rubio mentioned that specifically when he spoke to reporters, saying that neither side wants to see Taiwan being a destabilizing force in the region. And of course, this is important because U.S. assets, military assets in the region have been shifted to the Middle East. So their resources in Asia is a little bit thin now. Could this be a time for China to push the U.S. to maybe change their stance on Taiwan? I mean, hard to say. It's probably going to be the status quo, but of course, Iran, Taiwan going to be top of the agenda, and of course, those ongoing trade issues as well. And they're going to be discussing, of course, that defense budget in Taiwan later on today, too. Min Lo, our China correspondent, on all things, of course, of China and what we have seen and now confirmed that Wang Yi is now meeting with the Iran foreign minister in Beijing right now. Coming up, you'll hear why our next guest says that when it comes to this monetary policy cycle here in Asia, perhaps we've bottomed out for now. More in the moment with Jason Pang from JPMorgan Asset Management Fixed Income Portfolio Manager. This is Bloomberg.
The dollar is down today, and when you look at... why don't we look at this first? Why not? Okay, so oil is down today, and I think that goes into really where you are as far as risk appetite is concerned. U.S. futures are up 0.3%. This risk, a very good risk proxy, a proxy of risk appetite. Aussie yen on your screen is also seeing substantial upside here. The FX story is down. The dollar, can we bring that up, please, if we can? Thank you. Bloomberg dollar index down a third of 1%. And, of course, the Korean won is leading the charge as far as EMFX is concerned here.
Yeah, so at least that's helping this dollar softness across the board when it comes to this part of the world here today. You're seeing some strength cross through, whether renminbi, we're back to around 681 levels as well. Taiwan dollar, Korean won is also doing and outperforming here today. But really, this is against a backdrop what we've been seeing from central banks, right, where you have them seeing a shift that's tilted a little bit more hawkish, right? When we saw the RBA yesterday, right? So a third straight hike. But they did kind of say that maybe it's time to hold, given just some of the policy risks involved when it comes to the potential growth impact this could have. South Korea, they were a bit more hawkish in the last meeting. Indonesia has also stepped up when it comes to their FX defenses and what they can do for the rupiah. We talked about yen intervention, and of course, Philippines there, after that nasty print that we saw in inflation just a few days ago, they said ready to act, quote, as needed. Let's bring in Jason Pang, Asia Fixed Income Portfolio Manager at JPMorgan Asset Management. You're saying that things maybe have bottomed in terms of the easing cycle here in the region, but how do you think central banks are still going to respond to, of course, this energy shock?
Sure. So I think last time we talked about the bottoming out, this excluded the energy shock, but I think the surprise prints that we saw on the Philippine CPI, I think reinforces perhaps a more trending dynamic for the coming quarters for this region. In the sense that, first of all, there's a lot of unknowns still on the geopolitics of the Strait of Hormuz, but let's say that higher oil for longer will translate into sort of a more hawkish bias within the region. So, not only BSP coming with a price hike, but BOK has been a bit more hawkish as well. So I think the comments surrounding this will probably be incrementally moving into a higher interest rate. And that's predicated on the assumption that oil remains sort of 80 plus is our thinking.
So what exposure specifically on Southeast Asia is warranted at this point in time, from your perspective?
Sure. So I think we have been long advocating that Malaysia local remains sort of good exposure for investors. And because it has a natural hedge, not only from an oil perspective, but I don't know if you've seen the electronic exports. It's basically been rampant over there and parabolic. So I think in that context, we do think that, if you wanted to play a sort of hardware-related or AI-related trade, this country to us from a beta perspective certainly makes a lot of sense. Likewise then, as you know, we've been paid on Malaysia rates because we do think the economic profile is comparatively more robust. And I think in both cases, Malaysia ringgit has done well over the past few quarters. Same for the Malaysian rates.
How do you look at credit spreads? Because I think IG in Asia, it's record lows right now. Do you think that's a sign of fundamentals are strong still, or is there a bit of complacency there?
I'd probably say that at this juncture, at least for us, relative to the valuations, we do agree that spreads do come across a bit tight. This probably is due to the sort of lack of investment options if you do want to invest into the Asian credit side. I think for us then at the margin, we've been more taking profits on the spread product and sort of rotating that into some other convertibles or other higher yielding opportunities in the frontier space.
But does that remain the case, you think, over the next, I was going to say 6 months, but let's call it the rest of the year. Can we expect spreads to remain range bound at worst, tight at best?
I think spreads will probably remain quite stable, although I'd probably say that if oil does go materially higher to maybe 120 to 150, then we might see a mini episode of what we saw during the initial phases of the US-Iran situation.
Okay. We talked about FX currencies. It seems like we've seen some intervention from some of these central banks, but most of Southeast Asia has been quite vulnerable and have been really hit by this energy shock here. What are some of the bright spots still in the EM/FX space right now?
Sure. So I think within the EM perspective, people have been more, underweight the Asia high-yielder FX and overweight the LATAM FX. I think that trade has been proving to be quite profitable for the EM investor base. For us, then, I wouldn't disagree with it, but I would also say that, there's increasing optionality in my perspective where higher oil for longer is being priced into many curves within, Indonesia, India, and Philippines. The 10-year bonds in most cases are, getting close or even above 7% in some cases, and the currencies are cheap. So I think what I would say is we do see very good value creation, and we should be ready for a potential reversal in case oil goes back to 80 or something lower than that.
What's the trigger for that?
So it can be a de-escalation, right? Certainly we've seen a sort of on and off switch between this whole escalation or not.
Right.
But I think at the same time, I think markets already priced for this higher for longer already. So if anything, then you get any resolutions, then I think that surprise factor can lead to very good capture.
And you think that's already, say 7% local rates, that's already baked in?
It's already priced in, 50 to 75 bips hikes across most of the region. So I think, if it's priced for hikes, we should be thinking if it's overpriced for maybe 100 to 125, then we should actually buy more into the value creation.
RMB has been quite stable. Can it stay stable in the face of all this volatility that we're seeing?
So I think the market carries high degrees of confidence on the strategic reserves on the oil side. So I think that's why it doesn't have the disproportionate impact that we see in some other countries. And indeed, the CNY fixings have been very stable. So I think our impression or view still remains that, there's U.S.-China potential trade talks or other talks in mid-May, right? If that's true, then our expectation is renminbi will remain stable. So we do think that's a very valid anchor within the region from an FX perspective.
How else do I play that, the trade talks next week, apart from renminbi?
So the way that we've done it is, as you know, we've seen a rampant rally in Kospi and some other stock exchanges, but I think the Hang Seng remains relatively attractive. So we've actually had some good convertible bond opportunities there where, we can get sort of like a 1 to 5% yield depending on name. And that allows us to capture potential upside if there's any, positives that come out from this talk.
You mentioned about how Korea and how Taiwan is doing right now, and you're not really, you can get the exposure in the equity space with the whole AI trade. How does a fixed income, expert like yourself gain exposure to this sort of AI sort of story? Can you?
We actually have been engaging in this for the past 2.5 years already, using convertible bonds. So there are certain Korean or Taiwanese semi-related type of names that are available, and we sort of bought them at a much lower level previously, and we used our high yield risk budget to sort of substitute for this. So I think that the message is, of course, we were participating, not in the same degrees of equity,
kind of
but
FOMO
certainly versus high yield bonds,
Yeah.
we think that there's a very valid position for us to have some of this in the book.
What has surprised me so far, and I think we talked about very tight spreads already, is that oil at $100 for 3 months now hasn't showed up in, I don't know, just lower quality credit, for example. Why do you think that is? And do you think that's about to come?
It will, if it is about to come, then the scenario that we would foresee is indeed that 140 to 150 oil shock that we come through.
Okay.
Or you're telling me that, this gets drawn for another 6 months.
Right.
That is when I think the pain will start to come through. So we are seeing, for example, the recent surprise hikes. That is starting to feed into sort of some of the asset pricing, right, on the local rates and FX. Usually those are the leader signals, right?
Okay.
And I think credit would be, in this case, a lagging signal. So that's why for us, at least, we've been incrementally, taking profits on the tightness of some of these very tight sovereign spreads or IG spreads. And that sort of is a sort of just-in-case scenario that we do hit into a much higher for longer type of situation.
We did talk about Hong Kong with a guest this week about just the amount of issuance and these corporates that are really kind
Honky
of
issuance.
tapping into the bond market here right now. Is this a sort of a trend that you're seeing, or what do you think?
I think local issuance has continued to pick up. If you use Hong Kong rates as an example, typically the rates here are lower compared to the US, and a lot of these are also Hong Kong issuers to some degree that have some capex or other expansion needs. For us, in terms of Hong Kong rates, we've generally used that as a US Treasury proxy, but I think in general, because the valuation is a bit tighter compared to US rates, we've typically actually used it more as a payer bias. So we use it to sort of use as a optionality hedge versus higher US Treasury.
What about inflation? How are you using break evens, if at all, of course? What is your view first on inflation?
So I think inflation, as we discussed, the Philippines surprise one is probably going to be the transmission effects that we see.
That's the worst version, though. That's the most extreme version.
I think it will feed through is the message. So I think it's a surprise, right?
Sure.
But what I think I'm trying to say is that feed through effect. Typically, the lag transmission is about 1 to 2 quarters. We are starting to see the first bits of the transmission.
Okay.
And transmission doesn't go like on off. It tends to trend. Yeah. So because of this, then I think that indicator gave us a very good signal that we might be in for higher for longer across the region, and that's why we should be prepared for potential rate hikes. But it doesn't change the story, right? We talked about a few quarters. The rate cut cycle is done, so now you need to move into tactical payers or more structural underweight bias in local rates.
And just generally, when you look at a treasury market at 4.5%, is that good absolute value? I'm sure you get questions around that.
I think on the U.S. rates, that's a very interesting one because it's actually outperformed most G10s and even Asia rate markets. And I think that goes to the point that, if you looked at sort of the net oil export balance, it is comparatively better than, say, some of the countries in the region that are pure net oil importers or even in the DM space. So I think because of that, then, it has its validity. But I guess what it showcases then is sort of a relative outperformance of U.S. rates versus some of the other markets.
Jason, thank you.
Yeah.
Fantastic. Jason Pang there, Asia Fixed Income Portfolio Manager at JPMorgan Asset Management. Right, we will leave you with a look at markets and how we're doing across, what are we looking at right now? Equity markets, 41,000 on the TAIEX index. Lots more ahead. This is Bloomberg.
All right, we're checking movers here this morning, and Wu Liangye certainly is what's sending a bit of a shiver across liquor makers here today. So there's a bit of a hangover effect after they had to restate some of their earnings from last year. And I think for analysts, they're just slashing their outlooks now, double downgrade from Goldman, and really slashing that price target to 83 renminbi on the back of concerns about reporting consistency now as well. That's in the likes of Luzhou, Laojiao also down about close to 4% here. On the flip side, we do see CK Hutch that certainly is extending those gains here, of course, on the back of this news of Vodafone buying CK Hutch's stake in the UK's largest mobile operator in a deal that could be worth about £4.3 billion. So there you go, 3% gains for CK Hutch right now.
On the back of, I think it was almost 5% gains that we had yesterday.
Yes.
So markets are already continuing to buy into the story of CK Hutch, maybe pulling back in as far as exposure to the UK is concerned. And, you got to wonder what they're going to do with that money now that you have quite a bit of cash there, I believe. China Overseas Land, this is an upgrade coming through out of HSBC, coming up on your screens. We're up about 4.5%. It also goes into the broader a sort of developer story, whether or not that is Hong Kong exposure and some of the bullish calls we're getting here in the city, or some of the green shoots that have re-emerged in mainland China. Xiaomi, very quickly here, the company posting, giving us a number of the new SUV orders here, over 80,000 as far as that order book is concerned. Lots more ahead. This is Bloomberg. We're back at records here on the regional benchmark, 1.6%. Can't wait for Japan to reopen, actually, so we might be seeing that, of course. But that being said, of course, futures are already adjusting in Japan and really reflecting this broad risk appetite that's coming back. Although, as you can see, there are pockets of weakness across the region. Oil is down, energy is down, consumer staples, that's likely the liquor story in mainland China. Some of the healthcare plays, of course, are not seeing this gain permeates within that specific part of the equity markets. China Tech is doing very, very well today.
Yeah, Asia Tech, China Tech even, right? So that certainly is, you're seeing even the China adjacent names that are doing very well, particularly when it comes to the semiconductor space. So you add the whole Samsung, SK Hynix there, you're seeing double-digit gains, that catch-up story after coming back from a holiday. MediaTek has been, well, we're coming off some of the highs, but it's been up 3 days, limit up for 2. And then there you go, Capricorn Tech. I mean, they're seeing double-digit gains for all of these sort of domestic chip-related names here today. Also continuing to show, right, that the semiconductor space, what the AI trade works, this is the place that works continuously here. But, there are some concerns of the concentration risk as well.
Yeah, especially going back to the Samsung story, right? We talked about this 1 trillion mark on Samsung, right? I think the market is about 4.5 trillion, so it's literally a quarter, a fifth of the Korean market, right? So, and I think one of the things that is likely going to feature more prominently, at least in the Samsung conversation, as we talk about this, can we get Samsung up if we can, is, the last chip cycle turned very quickly. And this one is going to turn, right? It's a question of really how... When and how clear that becomes apparent before the companies state it themselves. And when that time comes... markets will discount that very, very quickly. And what happens now to the earnings story, where you did get the bulk of, I think it's 90% of the earnings story in Samsung, specifically did come from memory, and what happens then to these valuations. But I guess we can worry about that. We don't have to worry about that. Yeah, another day.
Because it really still remains more of a supply issue than a demand one.
Clearly still a supply issue, yes.
But I think Eva Lee was telling us, right? When you take a look at third quarter or even just...
This year, because it's 9 months ahead of where it's supposed to.
Maybe that's when you start to see things, turn a little bit. But yes, this rally in tech certainly follows what we saw and heard from AMD as well, giving those robust predictions for its long-term growth and signaling that it's winning orders from the biggest spenders on AI. Let's bring in April Hong. She joins us now with the latest. Just give us a little bit more about this blockbuster sort of guidance from AMD.
Yeah, very strong sales forecast for the second quarter. AMD is expecting 11.2 billion, give or take 300 mil on either side. And this really pips what the average analyst was expecting, about $10.5 billion for the quarter. And it shows you how it's able so far to cash in on this massive AI spending that's gotten underway for the likes of AMD. It also shows you how it is able to, at such a stage, really clinch new customers. You think about how for some of these data center players, they're looking for perhaps alternatives to NVIDIA, which, yes, is still the dominant player when it comes to AI accelerators, but maybe these players are also looking at other options. There's a wide margin between NVIDIA and AMD, but, as I said, it's really about options at this stage and how it has also managed to clinch market share on microprocessors from the likes of Intel, especially for its CPUs that are regaining favor as it's used as a generalist sort of chip to run AI software. You think about as well how prior to the set of numbers, the stock had already run up 66%. If we see this rally extending in the Wednesday session, we could be looking at new records. And of course, a lot is at stake here, given how the hyperscalers have already been signaling more than $725 billion of AI-related investments for this year.
So let's talk about the other side to that, April, and how they're going to fund that massive build out. This Alphabet is borrowing quite a substantial bit of money, of course, and we've seen a lot of them actually tap the bond markets this week, multi-currency as well, April.
Yeah, absolutely. I mean, you think about how for Alphabet, it is trying to tap any market that it can. So it raised $17 billion from its biggest euro-denominated debt offering, along with the Canada-denominated note. And it tells you how it has to borrow big to spend big and invest in AI infrastructure. It also tells you how there's an insatiable demand for global investors for anything AI exposure, particularly out of the US. And increasingly, I think what it shows you is also how these tech hyperscalers are going to play a bigger role in bond markets in a similar way that they've done with the stock market. So you're seeing these massive moves as well in terms of borrowing to fund this infrastructure build out.
And speaking of AI, I mean, the big darling is still Anthropic. I think February was the month where they really roiled this whole software trade. Now it seems like they're coming for Wall Street. Oof, what do we know?
Yeah, so they rolled out a number of tools in this week, and these are very squarely geared towards the finance industry, hence the phrase, right, that they're coming for Wall Street. And these tools can help you draft some of these client meetings, can help you also to look at some of these financial statements, and they're geared towards the banking, insurance, asset management, fintech professionals. What this also tells you is how Anthropic is able now to broaden out its influence beyond Silicon Valley. And I think it was very telling in how one of its executives talk about how the finance industry is a great blueprint for the knowledge work. So you can see the direction that they're gunning towards and how successful they've been, to your point about them being a leader in this space. I think the information has been also reporting that they will be spending with Google to the tune of about $200 billion over 5 years at a time where there's enough demand, certainly, for its products that it needs more computing capacity. To just give you a sense as well on the scale of this demand that we're seeing for AI products.
Absolutely. Avril, thank you so much for wrapping all those massive stories for us. It's something that I would imagine markets will continue to obsess over these next few hours, if not years. Avril Hong in Singapore for us. 1 trillion, we talked about that. Samsung entering, becoming the latest company to enter this very coveted, I guess, in many, many ways in terms of scale, exclusive club. You only have 13 companies in this.
Yeah, and now they've ranked 12th. They're a second largest in Asia, of course, following TSMC, which is number 7 in the second column there. So certainly it is a milestone, a symbolic one, certainly. But yes, it continues to be a really good news story for Samsung. There you go. We're 13% up here this morning. It's just a beautiful chart, too. So we got to show it again.
Big, beautiful
as
charts.
Well. So in terms of other corporate stories that we're tracking here today, PayPal is said to be planning to lay off around 20% of its workforce in the next 2 to 3 years as part of a turnaround push. It's aiming for at least $1.5 billion in savings. Shares fell as it warned investors of a decline in second quarter earnings and said its growth challenges would not be resolved near term. New World Development says it has not yet reached an agreement in relation to a potential disposal of its stake in Hong Kong hotel assets. Now, Bloomberg's been told it's in talks to sell its 50% stake in a portfolio of 3 hotels valued at around $2 billion. Now, sources say potential buyers include Singapore-based Aerovest. All right, here's a look at how Asian markets are doing. We continue to be, really, when it comes to risk, we are taking it here today. We are seeing the CSI 300 coming back from that holiday up 1.5%. But really, the catch-up story continues to be the standout Kospi here. We're well above that 7,300 level for the benchmark here. We're up 6% here today, really led by the chip makers, as I've been telling you about. Taiwan, not as robust here today, but still punching some gains here this morning. This is Bloomberg.
Both countries understand that it is neither one of our interests to see anything destabilize happen in that part of the world. We don't need any destabilizing events to occur with regards to Taiwan or anywhere in the Indo-Pacific.
U.S. Secretary of State Marco Rubio there on the issue with Taiwan. He says he expects President Trump to discuss Taiwan with China's Xi Jinping when they meet in Beijing next week. Now, Trump's visit will be the first by a U.S. president since he went there in 2017 during his first term. Let's bring in Yan Li, Bloomberg economy and government reporter. He joins us now from our Taipei bureau. The comments on Rubio on Taiwan, I'm just wondering, how's that being received over where you are? And there's this term about Taiwan on the menu of these talks next week. What do we know so far?
Yes, the U.S. Secretary of State Marco Rubio said yesterday that Trump and Xi will likely talk about Taiwan in the upcoming meeting next week, and he also said that the U.S. and China understand each other's position on Taiwan, and said that it's in neither's interest to see anything destabilized around Taiwan and in Indo-Pacific region. So far, we haven't seen any response from both Taipei or Beijing, but China's Foreign Minister Wang Yi told Rubio about 2 weeks ago that Taiwan remains the biggest risk in the relations between China and the U.S. and urged Washington to make the right choice. And on the other hand, in an interview with Bloomberg News about 2 weeks ago, Taiwan's Deputy Foreign Minister told us that he was worried that Taiwan could be put on the menu during the Trump-Xi summit. And he also said that he was worried that Trump could make any change on wording from the U.S. Does not support Taiwan independence to the U.S. oppose Taiwan independence, which will obviously be a very big setback for Taipei.
Yeah, we spoke with one of our guests yesterday on perhaps one of the topics, at least topical for today, but it's certainly more relevant to the broader conversation on geopolitics. Jason Su actually chimed in on how important this defense budget is. I'd like to play that out, Yan, before we get your preview on that. Can we play that out, guys, please? Thank you.
If the defense budget cannot be met with sufficient allocation, it means that President Trump going into that meeting with President Xi would have some sort of a leverage to tell Trump that, hey, look, Taiwan is not even sure of its own defense preparation. Why should U.S. arm Taiwan if Taiwan itself doesn't want to buy weapons? So if Taiwan does not move quickly, Taiwan could easily become on the menu under Trump and Xi negotiation.
Yeah, give us a preview of this defense budget in Taiwan.
Yes, so the special defense budget that Jason was referring to was actually a special package proposed by President Lai Ching-te's government last November. And it hopes to allocate about 1.25 trillion Taiwan dollar, which is about $40 billion US dollars to allocate to fund a flagship air defense systems against any potential Chinese invasion. But so far, the special defense budget has been stalled by the opposition parties, namely the Kuomintang and also the Taiwan People's Party, for almost 6 months now. So, the question, the stake here is actually much bigger than the defense budget itself. It's actually a test of whether Taiwan could, to show the world its political unity and also credible deterrence at the moment when China's military prejudice is rising, and also Washington has been watching closely. And so I don't think this issue is going to be solved very easily, because judging from the vibes and also the discussion within the KMT, I think we might still have to wait for some time and even more rounds of negotiation before this issue can be solved.
Yan, thank you. Yan Li there, our economy and government reporter in Taipei for us. Really staking on the theme of geopolitics and markets. BlackRock Global Fixed Income CIO Rick Reider actually says that these risks on the geopolitical stage are rising despite the recent countermeasures actually between Iran and the U.S. Speaking to Bloomberg at the Milken Global Conference, he discussed this divergence between equities driven by tech on one hand and, of course, and bonds that are seemingly following economic fundamentals.
The difference in the technicals in the equity market and the bond market are as diverse as you can imagine, in that we don't create enough stocks. We're, the buyback relative to the issuance of equities, people talk about the IPO market, it's tiny relative to the buyback market. We don't create enough equities, and there's a huge amount of cash out there. So you just get this continued buying, and then there's no stock. Now, if you have a bad piece of news, it can trend down for a day, a week. In bonds, we're getting $520 billion a week of gross supply of treasuries. There's no dearth of supply, so you have that is distinctly different. The other is we're witnessing a growth paradigm that is unbelievable. That is, I think this year you can grow 6% nominal GDP after a number of years of significantly positive nominal growth. And then you see this in the earnings numbers that are coming out. I've been pretty blown away by not just that you have top-line revenue that's impressive, but you have pricing power. Pricing power is the worst thing you can have for the bond market, because obviously what it means from inflation side. So I think it can persist. When we think about portfolio allocation, and I know we've gone through this, you still have a lot of danger out there in terms of geopolitical risk. But if you said, what's my convexity of upside, downside, if you know you're going to have either good news or bad news, and they're going to correlate together oftentimes,
right?
Like equities have a whole lot more upside than quite frankly, interest rates do today.
Yeah. We'll bring this conversation to the corporate credit market because, the point has been made that spreads, you've seen a little bit of widening, but, pessimists might say that looks complacent. But when it comes to the strength that we're still seeing through in corporate earnings, when it comes to equities, I have to imagine that translates to the performance of the credits as well.
So, it's pretty hard, and people say, I don't like these spreads at these levels. That being said, the yield fits portfolios, not just our portfolios, but with your pension fund, life insurance company, any insurance company, et cetera. The yields are very attractive because the risk-free rate is high because the central banks are keeping it there for inflation. So those yields are interesting. It keeps demand at a pretty at a great pace. The other thing that I think is significant is when you have, people talk about could you have defaults? People talk about private credit. There's stress in private credit. When the economy's growing at 6% nominal, or let's say I'm wrong and it grows at low to mid fives, it's pretty hard to have a default cycle of any significance. I've learned over my career, cash flow makes up for a lot of mistakes. And as long as you have that sort of backbone of cash flow growth, you're not going to have any significant default cycle.
And that was Rick Reider there, BlackRock Global Fixed Income CIO, speaking with Katie Greifield and Romaine Bostick at Milken. And a reminder of our new online feature, which is the Bloomberg Video Hub. Subscribers can explore live streaming, news and interviews, all of our Bloomberg TV shows, documentaries, report analysis, and more. Check it out at bloomberg.com/videos. Well, Pfizer CEO Albert Bourla says his company wants to be a leader in the AI transformation. Bourla spoke to us after first quarter sales beat estimates as demand for older drugs helped offset a decline in revenues from COVID products.
AI will change the way that we do things. And as a result, because of this big disruption, will create a new list of winners and losers. And those that they will be able to transform themselves by using AI will be on the top of the list, and those that they will not will go in the bottom. Pfizer wants to be on the very, very top of this list.
One of the challenges for the CEO of such a big and complex company as Pfizer is you have to do more than one thing at a time. And I don't mean just develop more than one pharmaceutical at a time. You have to really manage the costs at the same time you're investing in the R&D and the development. How are you coming on that front?
You're right that you need to multitask if you are a CEO, and you mentioned some of the things that R&D, which is my passion, and I want to work with my scientists to understand what we can do. Of course, to control the cost, but we have to do also politics, if you are asking me. So I was spending more time in Washington than with my R&D people the whole last year and this year in the beginning. So. You need to be able to multitask, and as long as you have a good compass, a North Star, you know where the organization should go, and you select the right people that they can take you there, you are okay.
You do spend some time in Washington, as I understand it, and part of that, I suspect, is with the FDA. Mr. McCary, and there are a lot of reporting about Mr. McCary. I'm not going to ask about that specifically, but how has the FDA been for you? They were going to revolutionize the way they approve new medicines. Are you seeing that in practical effect?
I don't see it yet, but I wouldn't expect to see it also in such a short period of time. I'm very encouraged with the comments that they made. Martin McCary made some comments recently about how he plans to modernize FDA so that we can accelerate drug development, because China has already eaten our lunch. I have seen Dr. Oz speaking about how we can make HHS much more productive. So I'm encouraged by that. We haven't seen it yet, but I'm encouraged that they are thinking in the right direction.
There's been some back and forth, at least for those of us on the outside of the FDA, about the schedule for vaccinations for COVID. Has that affected your sales?
Yeah, it was mostly on the CDC, the schedule. There was some variation that FDA asked us to do on COVID, which we did, although we disagree scientifically there was any merit to do it, but we did it because they are FDA. CDC was a very painful story, I think, and they did things that hurt the credibility of this renowned institution. Things that forced, for example, the American Academy of Pediatricians to start issuing their own guidelines because they wouldn't trust anymore the guidelines of the CDC. Again, I think we have now a turnaround there. The new director that was appointed is a very credible scientist, has a lot of credentials, and I'm optimistic that all these bad things that we saw in the vaccines are in the past.
You also have been developing a vaccine for Lyme disease, as I understand it. Where does that stand? You need more data.
I think we are going to, with the data that we have right now, that was more than 3 years study, so we have a lot of data. And we are going to submit, and we will see how regulators will respond, but probably I'm encouraged that we will get it approved. This is a disease that is devastating. There is no vaccines right now, and the incidence is growing. There are 600,000 cases of Lyme disease every year, and the long-term consequences in the health of the people that are getting the disease are really enormous. So I'm optimistic that we have something good for the patients here.
Let's go international for a moment. I know that you've entered into agreements with some Chinese firms, both this year and I believe last year as well. Describe those agreements and what they do for Pfizer.
We have done several agreements. Most of them are in licensing, which means that technology and innovation that they have developed, that's very early stage, that we found promising. We license these technologies and we are developing it ourselves, not in China, but in the US.
Right, we're just wrapping up the show here, so we will see you all tomorrow. We will leave you with a look at this strong rally across risk assets led by tech today. Right, see you Thursday. This is Bloomberg.